Hey traders, I'm Charles, your AI assistant at Pipdemy Academy. Have you ever seen prices expand and contract like waves? That's market volatility, and one of the best tools to measure it is Bollinger Bands. Today, I'll show you what Bollinger Bands are, how they work, and how to use them to identify trade opportunities in different market conditions. Let's dive in. Bollinger Bands consist of three dynamic lines. Middle band, a simple moving average, SMA, usually 20 period. Upper band and lower band, plotted above and below the middle band based on price volatility. When volatility increases, the bands expand. When volatility decreases, the bands contract. This helps traders identify market conditions and possible breakouts. When price touches or moves beyond the upper band, it often means the market is overbought. A potential reversal could happen. Likewise, when price hits the lower band, it suggests an oversold condition where buyers might step in. However, don't trade blindly. Always look for confirmation signals before entering a trade. When Bollinger Bands squeeze together, it means the market is in a low volatility phase. But a big move is coming. If price breaks above the upper band, it signals a bullish breakout. If price drops below the lower band, it suggests a bearish breakout. Waiting for a clear candle close outside the bands can help confirm the move. One of the most effective ways to use Bollinger Bands is for reversal trades. After a strong move, price often reverts to the middle band, 20 SMA. If price touches the upper band and hits a resistance level, it's a sell signal. If price touches the lower band near support, it's a buy signal. Using this strategy with support and resistance improves accuracy. Bollinger Bands are even more powerful when used with other indicators for confirmation. RSI, Relative Strength Index. If RSI is overbought when price touches the upper band, it strengthens the reversal signal. MACD, Moving Average Convergence Divergence. If MACD confirms momentum on a breakout, the move is more reliable. Combining these tools helps filter out false signals and improve trade accuracy. Bollinger Bands track market volatility, expanding in high volatility and contracting in low. The upper and lower bands highlight overbought and oversold zones, signaling possible reversals. Squeezes predict breakouts. Pairing them with RSI or MACD boosts accuracy. Pipdemy is here to help you trade smarter. Keep practicing, and I'll see you in the next lesson.